Hi there, this is Chris with your trade for the weekend of October 29th, 2010. Alright, we're taking a look at Valero Energy here. Frankly, I know nothing about the company, but from the looks of it, ever since 2007, it had the biggest drop that you could ever imagine. Take a look. By mid-2007, we reached a peak of around $72. Since then, all the way down to $18.22. But today, I'm going to be talking about how I think that some money can be made in this. Alright, let's take a look here. I like doing the short term, of course. And I'll zoom in. This is our 6-month chart. And I'll get rid of these. Right here we have a channel, a bullish channel, and if you don't know how to trade channels yet, you should take a look at my other video, trading price channels. But we have a bullish channel here, and we'll follow the normal protocol. It's going in an uptrend right now, as we can see. I've drawn the lower trend line, upper trend line, and we have the normal protocol would be to buy at the bottom of the channel, sell at the top of it. Alright, now we do have a couple issues going on with this here. Firstly, this level right here around 1825, 1850, mostly 1825, we have a major resistance level that it failed to break through back in mid-August. So I'm going to draw the line from here over to the current price. Alright, as we can see, that level is going to be an important one because see, it touches it once, and if I could extend that, actually touches that line once, touches that line twice. Very strong resistance line. Okay, so because of the fact that we had that and that there breaking through, oh, and we also had this here breaking through this level is going to be especially hard. So what I'm going to do, I'm going to play this trade pretty safe. So tomorrow I'm going to put in my order for, here, let me get rid of these drawings. I'll do 25% of the total line, which that's where it is right now. But I'm going to put my order in for tomorrow only at, since I have this little thing here, this 1 day pattern. See that? Even though it's pretty hard to discern, that is what's called a candle pattern called the hammer, and it's bearish. So actually, let me check that one out a second and see if that is actually a hammer or not. My bad, the pattern is actually called a shooting star, which is the pattern that we see. Well, I can't even circle, it won't let me because that was today's price. That's shooting star, that just 1 day pattern. So I'm going to set my price for tomorrow right in the middle of the day before. So I'm going to set my buy price at 1805. Buy at 1805. And since I'm a little sketchy on this trade, I'm going to set my stop loss pretty close. If it closes beneath, I'll give it a little leeway. If it closes beneath 1785, I am out. So I am only risking 20 cents per share on this trade because do I have faith in it? Not really, because take a look at this. We're moving out, moving out, moving out to the long term. Here, that's a little too long. There we go, and I'll move that to the weekly chart. Moving out to the long term, and what do we see? We have a top, a second top. Well, hold on. This is what I am seeing right here. And on the bottom, this is what I am seeing right here. can I really discern what this is? It almost looks like a descending triangle, but it also looks like a falling wedge, which can be either bullish or bearish. And this is a long-term pattern. This comes back to 2008. So I don't know what's going to happen, but the chart says it could. The long-term chart says it could be both bullish or bearish, but frankly, I think it's going to be bullish because from a fundamental perspective, their earnings just came out. It was excellent. Their price-to-earnings ratio, excellent. So I'm staying bullish on this one, but like I said, buying in 1805 and selling, well, my stop loss is going to be only, there we go, 1805. That's where I'm buying. My stop loss is going to be if it closes anywhere below 1785, which will break this bottom trend line here. Alright guys, that's your weekend trade. Best of luck to all.